Christian Harris of MonsterMortgage.ca here. We're talking about first-time home buyers, and one of the first-time home buyers look at is how much down do I have to put? And there's kind of three different categories. If you're buying under $500,000, the minimum down payment is 5%. So if it's $400,000, that's $20,000 down. If you're buying over $500,000, it's a blended down payment. So on the first $500,000 is 5% down. Anything above that would be 10% down. So if you're buying for $600,000, the 5% on the first 500 is $25,000, and 10% on the next 100,000 is $10,000. So the total down payment would be $35,000 in that case. Once you get to $1 million and above, there's no more high ratio available to you. You have to put down minimum 20%. That's because CMHC does not insure anything over $1 million. So again, three tiers: up to $500,000, 5%; above $500,000 to $1 million, it's the original 5% blended in with an extra 10% on what's above $500,000, and anything above $1 million, now you're looking at 20% down to avoid CMHC. Over the years, first-time home buyers, the question is, how much should I put down? And my answer's always really been the same: put down as much as you can, because the more you put down, the better off you're going to be, because you're going to pay less interest, have a smaller mortgage, and have smaller payments. So for the first-time home buyers out there, if you think you can push it from 8 or 9% to the 10% mark, do it. If you're at 17% or 18%, get to the 20% down. It takes away the CMHC premium. So the more you can put down, the better. Sometimes I have the other end of the spectrum where I'm having someone say, I want to put down as little as possible, which is fine too if there's a financial benefit, or it makes sense to do as far as some long-term planning. But just understand also, in some cases, the lender may require a certain amount of down payment. Sometimes we have clients who only want to put down the 20% to avoid CMHC, but because they have bruised credit, or maybe their income doesn't show, they don't show as much income on their tax returns to qualify for the mortgage, the lender requires a deeper down payment, maybe 35% down. So there's definitely that sort of side of it where clients don't want to put down all that's required, but the lender requires it. But for first-time home buyers, my advice is always going to be scrounge up, gather as much as you can to put down. Understand there's other closing costs involved with buying your first home. You have land transfer tax, you have legal fees, moving costs, so you really got to do your budgeting, but as much as you can is always going to be my answer. Thank you.